Hello and welcome everyone to the Almus YouTube channel. This is our Market Morning series, and I'm Swaraj, your host, filling in for Shikhar Garg. Now, the major narratives which are going on, Japanese yen has continued to tumble. It has dropped 11% this year, outpacing even the Russian ruble. While the narrative on the American side is whether Fed is acting quickly enough with its rate hikes. The 30-year yields touched 3%. While on the Russia-Ukraine front, the Donbass region continues to be a major area of conflict. JK, lot of unease in the global markets, rising yields, a war which does not seem to be subsiding. What's your sense of the ongoing developments and how have the markets reacted overnight?
Good morning and thank you, Swaraj. So it's a record volatility yesterday. We look at everything moved, including the usually docile Chinese one, which broke 6.40 level yesterday, and today traded a high of 6.4350 on the yuan offshore market. Definitely, this is something unique because we had gold moving down 3%. We had the yields moving to record highs, 30-year, as you mentioned, going above 3%, and 10-year really knocking on. Yield curve steepening further. Of course, 2-year is also up at 2.56%. And but amidst all this, the global markets were relatively calm because some of the statements from a neutral kind of Fed members were less hawkish. Bullard, of course, said we may have to take the rate to 3.5% this year end, and maybe 0.75% hike in this meeting. But market discounts his statements and looked at the other statements which were slightly less hawkish. Also, market were looking at some of the corporate results which were beating estimates. More so, the IMF report on global growth, which has downgraded the growth for the full year of 2022 massively from 6.1 to 3.6%. And that has given a sense to the market that probably the economic activity will slow down and force the central banks to get less hawkish. And maybe Fed also may be towards the end of peak of its rate hikes by the end of this year or early next year. In fact, the market has already done Fed's job by taking the yields high to 3%, while Fed has only hiked official rate by 0.25%. So this means, let us all note that when there is a hike, actual hike by the Fed next month of 0.5%, which is very likely, the market reaction may not be as bullish for the USD as one would expect, because that is very much in the price already. Only thing that we may look at would be how they plan the balance sheet reduction. Of course, the IMF projections also downgraded growth for overall advanced economies from 5.2 to 3.3% and further down to 2.4% in 2023. For emerging countries as well, they reduced it by full 3 percentage points from 6.8 to 3.8. And for India, they downgraded the growth by 0.8% from 9 to 8.2. So the global markets, rather US markets, actually rallied yesterday, making up some of the losses, but we are far away from reversing the downtrend which has been in place this year. On the dollar, as I said, CNH made a new low of 6.4350. This is helped by the fact that Chinese economy has been slowing down. There is a widespread belief that they will be cutting policy rates, apart from easing liquidity. And more importantly, the yield difference between US and China, the real yield, has actually been in the positive territory in the US, and the nominal yields of 10-year in US is now much higher than the 10-year yield in China. So the investor funds have actually taken a reversal. That is the key reason why I feel the Chinese yuan has weakened. Of course, we are also hearing outflows from various emerging Asian economies on the equity side. India is also a part of it. We have seen almost $1.2 billion of outflow from Indian market in the last 2 days itself. And this is a continuation of the outflows that we have been seeing since the middle of last year. So that's about the Asian currencies. Of course, euro dollar continues to find support near 1.0750, which is a long-term trend line support for the single currency. We are looking at the fact that ECB may be, not in favor of weakening, seeing more weakness in the currency, because as it is, they are not hiking rates, and further weakness would only add to inflation pressure while the rates are not hiked. Another factor to bear in mind as far as euro is concerned would be the second and final phase of elections in France, where Macron is widely expected to win by a good margin. And Macron coming back is also seen as a transition to the de facto European leader, which Merkel held, and Macron would be seen as a bullish factor for the market, although Mario Draghi may also be a contender. But Macron, being a young person, the longevity of the leadership and his dynamism may be a good support for the euro. But this is a medium-term view, and in the short term, we are definitely looking at a widening difference between US and Europe on the interest rates, as well as the superior performance of the US economy. So, and of course, one cannot but look at the dollar yen, which has been making new highs every day. And today it was just a whisker away from 130 mark. Various jawboning from Japanese officials, but market is not so much worried unless they see an actual intervention. Of course, technically indicators are on the extreme side. We might see a sharp move down of 2 to 3% if there is an intervention, but that is something that we have to wait and see. Today, we have not seen much statements from the Japanese officials. The silence from them is usually a precursor to an action. That is what I have seen in my experience. So let us watch out what they do. We already have seen it slightly drop from 129, 30, 40 to around 128.70. Market might be getting a bit cautious because it is definitely overdone. Overall dollar, of course, dollar index is 101 and it's not budging so far. Good news for emerging markets has been the the oil importing countries has been the fall in the Brent crude prices by about almost 10%. So that's actually a help for India as well. Indian rupee, which has been held steady due to actions of the central bank as well as some modest flows, yesterday suddenly weakened after the Chinese one started moving above 6.40, and also there was a news about Russia starting their next phase of conflict in Ukraine. We did move by about 30 paisa in a space of 30 minutes, but since then in the offshore trading, that level of 76.55 has been holding up well, rather capping the rise, and we should see another day of volatility in the USD INR. Near-term target looks like 76.65, and downside is very well supported at 76.20. We'll closely watch dollar yen movement and how far the dollar yuan goes. Instantly today's fixing in yuan by the Chinese central bank was also was close to 6.40. Yeah, that's it. Look for another day of high volatility and have a good day. Thank you.
All right. So as JK mentioned, we have to brace for a day of high volatility. So make sure, guys, you manage your risks. Till then, we'll all see you all tomorrow. Have a great day. Bye-bye.